The government shutdown is starting to wreck crypto in a big way, but other markets are starting to get hit as well. We'll talk about Russia and also tariffs going into Canada, how that is all playing out. Let's get into it. I do want to thank our sponsor, and that is iTrust Capital. When times are like this is where you start to lock away your assets and look for better days. And the way to do that is get into a crypto IRA. You can do that over at iTrust Capital. Get into both crypto as well as gold and silver. A ton of assets available over there to start locking in your IRA, which is a long-term investment strategy that everybody should have as part of your portfolio. Without a doubt, use our link down below. It does help you get started, and you get a $100 funding reward if you do set up an account. So do that and get going. Let's go over and lead off with some issues in the market right now. Massive crashes are underway. 3.6 trillion now wiped out in 90 minutes. Silver is dumped 8.5. and erased 400 billion from its market cap. You got the S&P falling down to 620 billion. And then NASDAQ comes in with 1.6 down, another 600 billion coming in. Much ado, crypto comes in at 3%, wiping out 70 billion. So you can see all markets right there in the red right now as we are leading into a tariff standoff with, I think, the White House, and a lot of that is coming because we are looking at pressure across the markets in general. One other thing, when you consider where the market is, you got to look at Bitcoin. Some of the pressures on Bitcoin right now is where El Salvador is currently, roughly 300 million, exposing risk of President Bukele's crypto bet. And of course, part of this will be because of the pressure from this IMF loan at 1.4 billion. This, of course, could put a lot of pressure on Bukele to sell. So be on the lookout for that. What would happen, do you guys think, to Bitcoin if El Salvador started selling Bitcoin? Also, the big issue right now facing, I think, the tariff pressure that's causing an imposing crash on the market is what's happening right now on the U.S. House, which passed the bill to go to the Senate. This, of course, will basically outlaw Trump's tariffs on Canada. The way it works, though, it goes to the Senate. If it passes the Senate, it goes back to the House, and it has to get a majority. So if it has to win a majority, then that means most of those House members would have to defy the president. And he put out a warning here. Any Republican in the House or the Senate who votes against this is seriously going to suffer the consequences. Basically, he is talking about primaries. This, of course, leads into the day that we consider the big day, and that, of course, is coming up in the midterms. All of this is going to play out in the midterms, and it's getting hotter and hotter as we speak. You can kind of see the House votes right there to overturn the Trump. It was 219 to 211, pretty close, but still 6 Republicans joined the Democrats to pass this. So let's just know that right now, guys. That's the 6 right there that did it. Other topics I want to hit on, of course, was the news on Russia and the United States. Russia is considering moving back to the U.S. dollar as part of a wide-ranging economic partnership with Trump. This will include a ton of things, joint investments. We're talking about fossil fuels. This is, of course, Russia's strong point, offshore oil and critical raw materials. That's a big one as well. And then, of course, this aligns very interestingly because you've got 2 of the biggest powers now that may have a deal to support the dollar, where China is actually going the other way. So kind of interesting in terms of the global politics, especially when it matters of the big titans that really run the world. U.S. dollar is testing a 15-year support. It's now or never. This is maybe a good sign. Maybe this was the antithesis of why we started to see this deal being done. Then, of course, you have the World Uncertainty Index surging past our 2020 pandemic highs. People just don't know what to expect right now coming out of the U.S. and everything that they are doing, because it is a scenario where a lot of oars are in the water. Crazy moves are being made all around, and of course it is affecting markets now. And I think Trump might have some pressure, maybe for the first time, especially from Wall Street, because remember, it's been up only for almost his entire term, at least on this side, with the exception of crypto, which has been down, down, down. So understand that. U.S. layoffs are skyrocketing. This is excluding the government, and this, of course, is talking about their 3rd highest month for job cuts since 2020. So this is another problem. I thought we might see slowing in the job market. I'm getting more concerned that this may be the beginning of a much greater cut as we start to look into later this year. Non-farm payrolls revised down. Also, you look at previously reported jobs have been erased. listen, you've heard me say this before. I don't trust any of the data coming out of the government, and you can't. It's almost impossible. Anything they report on seems to always be revised down, and that's even when Biden was in. We've seen it all through, and now with Trump. It's just a constant flow of BS coming out of these government agencies. Let's go over to this right here, because all of this is going to depend and start to impose a little bit of movement with the Fed. Let's see how they react. Take a look.
Market price for 2 rate cuts this year. I think it's a pretty good bet that the new chair will come in and cut rates. And I don't think that's a big deal. I think that's an expectation of the market. But beyond that is where the question is.
Look, I think the economic data does not support an aggressive move down by the Fed. Maybe one more and then done. So I think the market thinking that Warsh is going to come in and start a productivity campaign to cut rates is, I think, maybe a little bit misguided. The other point to note is people are sort of misremembering history. The last time we had a productivity boom, Alan Greenspan and his Fed refrained from raising rates because they thought the economy could run hotter than had been expected. They did not start an aggressive cutting campaign. And so I think people are sort of misremembering a little bit of history, and perhaps, I think, boxing Kevin Warsh into a place where he may not be able to deliver a series of rate cuts behind the productivity story, nor a series of rate cuts behind a softening economy story.
Okay, so a couple points there. He says one and done. I say it's going to be more than that. The pressure right now on jobs is going to be the big one. It appears that we may have more deflationary issues facing us as well when it comes to inflation. If inflation continues to move down and jobs are moving up, now you run into a stagflation scenario. This, I think, is a big problem for the Fed. And if we do, and remember, Greenspan was around when, yes, we had productivity boom, but we did not have the kind of productivity boom that we could be facing now with both AI and kind of the growth sector that could still come out of this and put a lot of pressure, continued pressure on the job market, which I am kind of thinking this may be a little bit of a canary in the coal mine when it comes to the jobs. Let's go to another clip, because the macro side of this is where it starts to get a little bit dicey. Tom Lee goes in and kind of says this out loud. Take a look.
Yes, I think the macro is a little confusing for investors at the moment, because we not only have a new Fed chair that's announced, and his policy stance isn't clear.
For the first time in history, the S&P went from overbought to oversold back to overbought in a week or less. Goldman's Tony Pasquarello, Tom, says he can't recall a time that was this noisy, this high velocity, this wide open. What about you?
It's very confusing, Scott. I think that there's 2 things happening, but I think one is really the bigger effect. I think the smaller effect is that AI, as you know, has gone from being this sort of driver of S&P earnings. Now the market questioning, is AI just wrecking tech so badly that it's bad for the stock market? And also, they're not buying the data centers and hyperscalers anymore. They're actually trying to buy the bullets, not the armies. Gold is now bigger than the stock market. So I think as gold rises, I think investors are wondering, do they really want to use stocks as a store of value?
That's a big statement there. Do they really want to use stocks as a store of value? If you have that, and also the word confusion came up twice in that. I think Wall Street does not know how to deal with this kind of volatility. The good thing is that you guys do. If you're watching our channel, you've been in crypto for a while. You understand volatility and how to maximize on it. So this may change things quite a bit for the way traditional Wall Street is going to be investing in the future. Another thing that's going to factor into this is going to be a government shutdown, and that is going to happen. It looks like we're going to have one right there on Valentine's Day, holding it about, 95% chance. Looks like it's going to happen, so get ready, guys. This may just be the beginning that could cascade into several other things because of one thing. Government shuts down. Clarity stops dead in its tracks. That's going to have a big factor and effect on crypto in general. Let's go into this because Bloomberg talks about the shutdown and why it will most likely happen. Take a look.
Our view is very simple. ICE and CBP should operate just like other law enforcement agencies around the country. They should have body cameras. They should have accountability. They shouldn't be using taxpayer dollars to terrorize our communities. That doesn't seem like a heavy lift. We feel that that is important, and that's what we have been advocating. If the White House has different thoughts and they have legislative language, it would be helpful if they shared that with us. We're hours away from a shutdown, so the clock is ticking here. But unfortunately, I don't believe that this is going to be a serious offer from them that we can take up.
All right, so you have it. The Dems are kind of on the fence here. And I think that this statement kind of hits it on the head right here. Democrats, don't be fooled. If you cave and approve the DHS funding, they'll be back and worse than last time. Republicans keep showing you their hand, so stop shaking it. I think the scenario is, I agree with that, is I think that the Republicans will continue to push on this. I do agree actually with the Democrats in terms of what they're asking for, which is basically, no more of the harassment. Just do the job, get the bad guys out, take your masks off. I agree with that. I get the safety behind it, but the problem is this is inside the United States, and I think the narrative that it pushes onto the American people is just negative. So the good thing is here is that maybe they can come to a little bit of maybe a little bit of an agreement here and get this through and hopefully move this forward, because clarity to me is critical right now. All right, so the clock is ticking on clarity, and of course all of this boils down to the crypto bill getting through. The fate hinges now on Trump's stablecoin yields, I think, on Trump and stablecoin yields, and I think this is the factor right here. Stablecoin yields, rumors are that we might have a little bit of an agreement coming out of the White House meeting yesterday, but the crypto industry views are diverging quite a lot here. In fact, you got anywhere from a 25 to a 60% range here. But Ron Hammond, been on our show quite a bit. He's the head of policy over at Wintermute. He's saying only 25% for 26 to pass in 26 for clarity. So that's a big deal. That would be huge if clarity does not go through this year. Let me know in the comments, guys. What would that do to you? Would you step out of crypto entirely? Would it be a great opportunity to buy the dip and continue on? Because remember, we've operated multiple markets without clarity in the past. How would you play it out? Drop in some comments down below. Now, I want to go into this because this is another pressure point on clarity that matters, and it's coming in from the SEC. Take a look.
For all that are watching, we want to get this done. It's got to be done safely. Since you've already addressed the fact that tokenized stocks are still a stock, and a stock is a stock is a stock, how are we thinking about this? What do you think?
Potential for smart contracts. So there are already developments out there to incorporate into the token itself AML and BSA sort of concerns. This 3643 is on the Ethereum blockchain is one example of that, where people are experimenting with things that are embedded in.
Well, we are working, and I want to share my Republican colleagues are working on this as well. Definitely want to get this right.
What do you think about self-custody? Should I be able to be a custodian of my own digital assets?
Yes, I believe so. I mean, I think that your right over your property should determine where it should be held.
A little troubling that during this entire hearing, you haven't thanked Gary Gensler for setting such a low bar for competence. So I just urge my colleagues to let's get this bill across the finish line. The staff has spent thousands of hours getting this done, and I think it's long overdue.
Yeah, we got to get Bernie on because he's definitely got a full understanding of what's going on in the market right now. That was Paul Atkins coming in from the SEC, Gensler's replacement, which he should thank him for that. I would agree. But if you look at the Clarity Act right now on Polymarket, there it is, 60%. So maybe Paul Atkins knows something here, and he understands where the market is. He understands enough around it. You heard him mention Ethereum. There's a lot here, I think, that maybe people don't really completely put together as the full puzzle of what this is going to do for regulations in terms of the crypto market. It's going to happen, guys. It's just a matter of when. And if all these shutdowns, remember, you take away all these shutdowns, this is probably already done. So this is the thing that we are facing right now. Standard Chartered, though, continues to downtrend on Bitcoin. Bitcoin falling to 50K is what they see now, and around 1,400 for Ethereum. So let's look at the chart here, because they had a couple of things. They had a 100,000 Bitcoin target which is further downgraded from the 150. That was last December. And they had already cut that target from 300K. All right. So they went from 300 to 150 and then now to 100. And you can kind of see here in the chart, literally everything has been cut over the next 4 or 5 years. So you've got Solana, Bitcoin, ETH in there, XRP cut. Everything's been cut considerably, BNB, and then of course Avalanche just shredded here all the way down to 18 for 2026. And not much movement here. So do you think that if we are and do not get a Clarity Act, how long does this bear market last? Do you think this is just the beginning? Does this become a long-term bear market, 18 months to 2 years? Let me know in the comments down there. Let's get into this right here because Matt Hogan says, don't worry about it. I don't think it's going to last that long. If you squint, you can probably start to see the kind of things that will lead us out of the bear market. I don't know about what Matt is doing over there, but he's still very, very bullish on a bear market ending. I am not so bullish on that. I think we still have downtrend. There's too much macro pressure here, too much uncertainty that is absolutely getting the markets wrecked. I think there's going to be some opportunities here for buying the dips, yeah, for sure. But being able to see this narrative come out of it is just not there. Hunter Horsley, also Bitwise, says the crypto narrative of this summer, agents, more announcements like this will be coming. I am not on the same wavelength as Hunter either. I think agents will take some time to really get deployed. Sure, there will be some that get deployed out there, but I hope that it does not go the way of Web3, where we had Web3 Hopium that was going to happen, and then everything literally just imploded, and all of the Web3 companies and software and gaming, all those things were impacted in a big way. So do agents and agentic start to get impacted here with crypto? Let me play a clip for you because this gets into, can Bitcoin outperform gold this year? Take a look.
Gold today has a $41 trillion total market value, okay? That means it's bigger than the S&P 500. Here I'm highlighting that just the intraday move in gold on January 31st was $5.2 trillion, okay? That's 4 times the size of Bitcoin itself. But here's the thing, is gold a good store of value? 48% of the time in the last 50 years, gold has not stored value. It's done worse than inflation. And then since Bitcoin was created, okay, Bitcoin has only underperformed inflation 5 months out of 160 months, which means 3% of the time. But in that same period of time, gold underperformed inflation 44% of the time. So again, I think you don't want to lose hope in Bitcoin. It's been a better store of value than gold, even though gold has looked better in the past year. So if you ask me in 2026, I think gold is going to underperform Bitcoin.
All right, so from Tom Lee there, you can kind of see gold is starting to maybe reach its top where we hold around 5K. Maybe that's the new top line in terms of its floor. Or not. It's very possible we could still continue to see pressure on this. If you listen to Andy Schectman, he talks about this all the time because of the macro, the pressure from countries and states getting away from treasuries and into gold. If that continues to push on it, the dollar is going to suffer and gold would continue to rise. Now, does Bitcoin become a new asset that can rotate in versus a tier one asset like gold? I just don't know if this is the year for Bitcoin to outperform gold. Maybe I will be wrong. I'm not just saying I will be wrong. I'm just saying I don't know if this will be the year that it does it because it's so volatile right now because of the dollar. I want to go into a couple other points right here that Tom Lee hit on. And just remember, Tom Lee has put in bottoms on ETH, I think 3 times. I can remember one around 27, then we got another one at 24. These were from his analyst, 24, after we saw Bitcoin coming off 3K like crazy. And then here we are. Tom DeMarc's signal is clear. Now he's pointing at 1890. I think he is going to lower this again. And this is only going to continue to raise the stakes for what's happening over with BMNR, of course. One other clip I want to hit on. This is CNBC talking about crypto institutions and are they insulated from this volatility? Take a look.
And truly, behind closed doors, they're all very optimistic. I mean, you have to look at crypto and you have to separate into a few different buckets. There's Bitcoin, And we can debate the right price for Bitcoin, but not the fact that it's here to stay. And then there's this kind of element that I described to you of like very high leverage, speculative assets. Then there's stuff that's working, really, really working, has utility in the world. Think stable coins, think on-chain financial applications. You may be familiar with some of them, but like I'll pick a Uniswap for example. And on the layer one blockchains like Solana or layer one blockchains like Ethereum, those are all working. And then fourth and final is what's coming, and that's this tokenization wave that everybody's preparing for. It's going to be a 20-year wave. You would think, as participation has pulled back, that stablecoin balances would pull back. No, not at all. Stablecoins have stayed dead solid. In fact, they've even gained 1 or 2% in terms of market share. So stablecoins are working. Tokenization is also working. We talk a lot about, oh, is it going to come? Is it going to happen? It's happening. We're already seeing assets go on chain. U.S. equities really is the first big start. Money market funds all around the world, and many, many more coming here in 2026.
Well, stablecoins are considerably more in terms of growth compared to where he is going. He is right in the sense that Wall Street continues to be very bullish on this. But remember, you can be bullish when a market is trending down and you know that the upside is so great of what blockchain is going to bring to Wall Street. So I get that institutions will continue to push on this. The thing that I'm interested in is how is retail going to be inserted into this? Where do they start to really play into this? Well, Mr. Beast could be the way that this all happens, because remember, we talked about BM&R investing $200 million into Mr. Beast and what he's doing from a finance company side. He's been doing a couple of acquisitions. So right now, it could be the next finance giant, maybe for Gen Z. That might be the entry point for this next generation. And remember, it's been done before. It was done by Robinhood in the past. And if you look at Robinhood, they're trying to go out and one up of what's happening for the centralized exchanges around the social side. Remember, Coinbase just dumped their social platform out of Base. Robinhood hears this. They're going and doubling down on this. Vlad comes in and says Robinhood Social is launching in coming weeks with whale tracking so users can follow and copy trades. This would be interesting if we start to see more activity on it. I'm curious, does Robinhood become a true new social fi platform that you would use? Would you use Robinhood if you had more social fi applications that were inside the app itself? Let me know if you would. Does that become your centralized exchange for trading crypto? Because there's a lot of challenges I've seen with it, and maybe some of those things will be lifted here in the future. All right, guys, we're going to cover this and a whole lot more, so it's going to be a very interesting week as we move into clarity very soon. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.